Well, I think you have to take an approach that's a little outside of the box. What we did is we looked at about a dozen or so companies that have come to market over the last 20 years that we could describe as similar to them. Primarily, those would be platform-oriented businesses. That can be everything from an open table, that can be everything from a C-Trip, an Expedia, a Booking.com, those types of names. And when you look at those businesses and you look at what they've traded at, respective of the growth rate that they've been producing on an enterprise value to sales basis, you would see for businesses, that group of businesses, you would see that they would trade at a mid-single digit enterprise value to sales multiple when they were putting up growth rates of, call it 40 to 75%. On our estimates for 2019, we have growth at Lyft improving 75% and at about 40% in 2020, which is primarily driven off the bookings and a little bit of improvement in the take rate. So when we look at that core group of companies, when they were producing those top line levels, they were trading at kind of a mid-single digit EV to sales multiple. Assuming those levels, we think fair value for the shares is somewhere around $90. If you really want to get bullish and look at a shorter time frame for those periods when those like companies were producing those growth rates, you could create a scenario that would push you to, maybe $120 to $130 in terms of the stock price. I think that's a little bit of a blue sky scenario. I think it understates some of the competitive risks that may be on the horizon for Lyft and other companies in the ride-hailing category. But if you want to get bearish on the name, we think around a $65 level, which was the initial range of where the IPO was expected the price, was about as bearish as we'd get. We think fair value is probably closer to the $90 level.